Well, I think we're at a very important juncture here with the S&P 500 now, and US indices and global indices for that matter. We've got this retracement to the downside now that it has now locked into place, or appears to have locked into place, almost spot on our 50 to 61.8% retracement zone. Now that area was looking at the 1350 to 1370. In our last review, we were looking at this area as being a potential zone to start looking out for buyers to come in, and we've certainly got that at this point in time, and also leaning on this support area here, which is around this 1360 area. Now this is the former resistance line that was in place for 4 years until we got this break to the upside back here, and that was a 4-year high. We dipped back down low but then moved back up higher again, and this was something that we were going to look to lean on as well in combination with our Fibonacci numbers just here. So that was all around this 1350 to 1370 area, and as you can see, we've got a very good spike up to the upside last night. But even the previous day to that was holding our interest when we got it. It was something that we were looking out for. Strong probe to the downside down to that 1343 price area, but prices closed way up at the top of the price bar there at 1360. A very positive day that has had some follow through, so we're going to keep a very close eye on that. That's looking quite positive to me, as well as the fact that we've headed into this typical retracement zone. Not quite as low as the intermediate wave A versus wave C equality area at 1320, but we did get to 1343 there, and it may be that that is good enough as far as being close enough. But we now need to assess whether this is just going to be some form of bear market rally to the upside, and for mine, really the price area that we need to look at here is around 1430. As you can see in that price area right there, we've got some minor support resistance coming in. So when prices, if they do head back up into this area, it'll be a reasonably deep retracement of this move here. But that area there around that 425 to 435 area will be where, if we're going to get another retracement to the downside occurring, that's where we're going to get weakness starting to come in, just where we've got a little bit of overhead supply there coming into play. So keep an eye on that if this does continue to march higher, because it's certainly a point that could be very significant indeed. So just keeping a little bit more of an eye on this. It's looking positive at this stage, but we need to see whether this is going to be sustained. What we've been looking for is this ABC flatter type pattern to complete. We weren't happy with this wave B to the upside as far as it being a bullish move. It was clearly corrective, clearly overlapping. It was something we kept alluding to in all of our reviews, that we weren't happy with this push higher. We didn't think it could be sustained, and really what we're looking for is some form of clean out. We do appear to have got that now, so ideally that has cleaned out a lot of this mess, and we start getting impulsive price action to the upside, and as I said, ideally into new highs potentially over the next 6 months or so if this continues to sustain. But too early to tell just yet. We've lent on support, all good and well there, around 1360. Our Fibonacci numbers 1350 to 1370, nice confluences there as well. We just need to see if we can get a sustained move to the upside here, a nice higher swing low pattern that bursts through this 1425 to 1435 area will be very positive indeed. But we just need to see whether this is a real deal now, and the only way we're going to be able to see that is if it can be sustained firstly, and that we get a swing higher and prices turn impulsive. It's certainly going to be a very interesting next few weeks.